I take a lot of phone calls from people shopping around for a mortgage where the first question they ask is, "What is your rate?" And I start asking them follow-up questions and they go, "No, no, no, I don't want to make an application. I just want to know what your rate is. I'm shopping around for a mortgage. I've spoken with my bank and I want the best rate. Why can't you just tell me your rate?" And I explained to them that there's a lot of different variables that go into an interest rate. It's not a one size fits all. It's not, I don't want you to pull my credit without knowing what my rate is going to be. So then I explained that there's not one single interest rate. There's a whole bunch of variables that go into it. For example, I'm pricing a loan out on my computer now. What is the loan type? Are you trying to qualify for a conventional loan? Do you need FHA financing, USDA, VA? What's the purchase price of the home that you're looking to get? What's the loan amount? How much are you wanting to borrow in relation to the purchase price? How much money are you wanting to put down? The more money you put down, generally speaking, the better the rate. What is the purpose of the transaction? Are you purchasing a house or are you looking to refinance? If you're looking to refinance, are you trying to pull cash out? Are you trying to reduce your interest rate? What's the purpose of the loan? The house that you're taking the loan out against, is it your primary residence? Is it a vacation home, investment property? Investment properties and second homes are going to tend to have higher rates than your primary residence. What kind of a house is it? Are we talking about a single family home, a duplex, triplex, quad? Manufactured house? Is it a double wide, single wide, condo maybe? The property state makes a difference in interest rate, believe it or not. Different states can have small adjustments in the rate. Here's a big one. What is your credit score? A lot of times I'll get an answer where they'll say it's above 700. Well, above 700 can mean a lot of things in terms of interest rate. There's going to be a big difference between a 705 and a 745. How long do we need to lock your rate? Is it a new construction home and you're still 3 months out from completion? Or are you already under contract, ready to go, closing in 3 weeks? The amount of time that we need to lock the loan is going to make a difference. Obviously, the longer lock period we need, the bigger impact it's going to have on the rate. Are you looking for a 30-year loan? 20, 15, 10? All of these factors come into play when determining your rate. And when we're discussing rate, most of the time we're talking about interest rate, but a lot of people overlook the mortgage insurance rate if mortgage insurance is applicable. Ooh. Two lenders could have identical rates and identical costs, but one might offer a lower mortgage insurance rate, which could make a difference. That's another thing to consider that most people might not even think about or look at. So if you're shopping around for your mortgage, and I encourage you to shop around, please let the mortgage professional do their job. Submit an application, let them pull credit, let them know what they're dealing with so that they can provide you with the most accurate quote possible. The worst thing that can happen is you speak with the lender, they quote you a rate that you love, and they find out later, oh, they're not going to be living in this house. They're buying it as an investment property. All of a sudden, the numbers may not work. Let us pull your credit. Look, I know that people are hesitant to have their credit pulled, but the truth is that you are able to shop around for a loan and have multiple lenders pull your credit and only get dinged one time on your credit score. Sure, each inquiry is going to appear on your credit report, but the bureaus know that you're shopping, and generally speaking, within a 30-day window, if multiple mortgage lenders pull your credit, they're only going to ding your score one time. Now, that's not to say you can apply for a store credit card and go to the car dealership and have them shotgun your credit and then apply for a mortgage. Those are all different industries, so you're going to get hit on your score each industry that you have pull your credit. But if it's one mortgage company versus another versus your bank, then you're only going to get hit on your score one time, and it's a minimal hit. Look, it's a couple of points. 5, 6, maybe 7 points. This is probably going to be one of the biggest purchases of your life, and it's vitally important to shop. Use somebody who can offer competitive rates and terms and provide good service, and use somebody that you're comfortable working with. Even if it means taking a small hit on your credit, you've spent your whole life building your credit for this very moment. Use it. I hope you guys learned something today or took something away. If you have any questions, I'd be happy to go over things further. My number is 910-791-1337. That's how you can reach me at the office, or you can email me, justin@acfsmortgages.com.